Bernie, I guess you and I didn't get the memo about the no sleeves for this one.
Bro, I don't even own a tank top.
Maybe you should. You see how Straza's got a way better tan than you do? Like, look at Straza's tan and look at yours, or lack thereof.
What do you want me to do? First off, I don't tan. I just don't have the skin for it. It's
either, I just walk my dog, asshole.
It's either I'm pasty white or red like a lobster. And, generally the pasty white comes with less pain, so I opt for that. And then the other thing is New York City. Like, well, I'm going to go sun tanning in New York City.
Don't you live 2 blocks from Central Park?
I'm just doing what I was told.
Yeah.
You literally live 2 blocks from Central Park.
Yeah.
What up, homies?
Get out there.
Johnny, baby. Sean, how's your heavy metal going these days? Are you listening to a lot of heavy metal?
Not as much as I used to.
It's unfortunate.
It'll always be with you, JC.
Man, I'm listening to way too much Motorhead.
Oh, that's not good music.
You know, I used to think that, and it's really helping this whole book situation. Like, I'm just like ripping through this book.
JC, of all music, heavy metal is what.
Yeah, because you know why? I'll tell you why. Because for the same reason, classical music, I always liked classical when I was writing.
Yeah.
Because there's no words. I can't sing along.
You can't have lyrics. When you're writing, you can't have lyrics.
Yeah, there's no lyrics. And then heavy metal's kind of the same thing. It's a bunch of old white guys screaming. So it's kind of like...
Basically no lyrics.
It serves the same purpose.
I get it. No, I'm like that too. Like if I'm just charting, I could listen to anything. Doesn't matter.
Charting, you could do anything, of course.
If I'm writing, it's like Baroque or jazz or fucking nature sounds.
Nature sounds.
Anything. But the lyrics, no, I can't do it.
So what counts as heavy metal? Is that like Rammstein or something?
I mean, I would say like Ozzy Osbourne would be heavy metal.
Black Sabbath, Deep Purple.
All right.
Deep Purple, not heavy metal, Jason.
Molly Crew.
Yeah.
All right. I don't know any of those folks.
Play some Pantera or get the fuck out of here.
There you go. That's that real stuff. That's Seattle alt rock.
It's crazy. The coronavirus index, I think, dropped on March 9th or March 10th. The market bottomed 2 days later. What was the bottom of the market? March 12th, right? The internal
internals bottomed on the 17th and the market bottomed on the 23rd.
Are you sure the internals didn't bottom sooner?
I could tell you right now. Hold on.
I thought it was the 12th.
You might be right.
The list of new 52-week lows. I think the list of new 52-week lows.
Yeah, hold on. Let me double check.
Peaked on the 12th.
March 12th was definitely the volume peak, at least in the S&P.
Well, that makes sense.
Yeah.
Hold on.
That makes perfect sense. Like that last capitulation.
Well, it wasn't the last.
Trickle down in the indexes, but the majority had already bottomed. Basic scenario.
Yeah, I mean, we still went down a good bit from the 12th, but the 12th was the highest volume day.
We went down on the indexes.
Yeah.
But most stocks already started going up from there. So, so then what's the options strategy going into the third quarter? And what's not the strategy?
Well, I don't think selling premium here makes a whole lot of sense. I mean, volatility has collapsed since March. It feels best if we're going to stay bullish to be keeping it simple and just buying calls and buying call spreads. I mean, it's as long as volatility stays low, that's no reason to overthink it.
And why the call spreads? At least bring in a little bit.
Well, mostly for the more expensive stocks, because a lot of these stocks are starting to get pretty expensive. A lot of the big names, like Baba and Facebook and Amazon, and they're all just, highly priced stocks. And I generally don't like to buy straight calls if a stock's just in absolute dollars too expensive. But, that's just my conservativeness more than anything else.
Got it. So more on the price thing, then you'll finance it a little.
No, but as somebody who trades options, that's the right way to look at it. Large price tickers are not attractive because you can't buy as many contracts, and then it gives you less flexibility to scale out.
And then what about if we enter more of a range-bound market and consolidate these gains and stuff like that?
And just to be clear, JC, you were correct. Market the internals bottomed on the 12th.
Now, if I only would have known on the 12th, that would have been some useful information.
Anyway, regarding a sideways market, I mean, it's very sexy and common for people to want to put on iron condors and straddles like that. But I would do it very cautiously here with volatility coming in across the board, because any uptick in volatility in either direction is going to make those short credit spreads tough to manage.
But that doesn't necessarily mean we want to be long volatility, because there's no evidence that we're entering a period like that. So you don't, right? I guess
so
if you're long calls, you're long volatility, right?
Yeah, but I mean, the goal is not to be long volatility. We're just taking advantage of the fact that it's so cheap.
No, being long calls is not being long volatility.
Yeah,
well, it is.
It goes up. Premium
technically you are.
Technically you are, but it's
you're not short ball.
Are you not betting more on price appreciation though when you go long call?
You only are, but it's a little added little kicker. How you doing? You know what I mean, right?
That's fair.
Yeah, Straza,
Yeah.
You're right, Straza. If you're long calls, you're mostly going to benefit from the price action. However, the caveat is where you will benefit from rising volatility is if you're getting long calls and you're starting to head into an earnings event where premiums just get juiced up across the board. That'll help in your favor as well.
All right. So obviously the things that we're buying keep working. Straza, let's just keep this conversation for the playbook. You want to run just a bunch of stuff for the year, show some stats maybe for Q2 and for the year to date through the end of June, like what the sectors did, what the indexes did, kind of like a weekly review, but make it a quarterly.
You want me to compare it from April 1st?
And from Jan 1.
Okay.
Right?
Yeah.
That'll be good. So maybe do like US industry. And then just do like I don't know if you want to do a scatter to show.
Yeah,
I don't know what you'd want to show.
I know what I want to show.
Year-to-date performance and what? What are you laughing at?
Max drawdown.
Year-to-date performance and max drawdown?
They're highly correlated because the
obviously.
Stocks, yeah. Well, no. Because if you look at the drawdown on a moving basis, yeah, they're obviously going to be highly correlated. Okay. I'm talking about the max drawdown. So you set your parameters from January to February for the top and then March for the low, right? And
so basically you're showing relative strength.
And then you fix it.
Got it.
You know what I'm saying?
Okay.
And those that have the shallowest drawdowns have performed the best.
And then what about the size of the bubble?
Is that boring? I think that's cool.
What's the size of the bubble?
I don't know. What do you want? I usually do RSI because Optimus bubbles get weird. Market cap is the best way to do it.
What good is that?
I know.
We know. I mean, I guess we know.
I'm with you. But when I put other parameters in, like the bubbles will get real fun.
Market cap. That'll be cool.
Do
market cap. Why not? Do market cap.
Yeah.
So Bruni, do you want to do something global and just kind of run with some of the themes that are happening globally? Maybe run one international table.
Yeah. So on the international and fixed side, I see three major themes that I think are worth discussing. The first is if the dollar is topping and the Shanghai Composite, which is 40% of the emerging market index, is starting a new bull market, then emerging markets are probably going to outperform in that environment. So I think that's a big theme.
They're 40% of the EEM right now after the changes.
Yeah, exactly. And combine that with stabilization and strength in copper and other base metals, I think that thesis is all coming together. So if we were ever going to see emerging markets outperform, now would be the time to do it sustainably. So we'll see if that can happen. I think on the fixed income side, there hasn't been much changing there, but I think it's interesting that if you look at XLF, XLI, XLE, all of the cyclical sectors versus the S&P 500, and then you look at high yield spreads, those are still above their 2016 highs, but below their 2018 highs. So they're stuck in that range. And I think if equities are going to continue to move higher, one risk signal that we need to see is those credit spreads break down further below those 2016 highs and show that, you know, the credit markets continue to soften. So I think I'll write about that because it's not necessarily actionable right now, but I think it's interesting. And then the other major thing is silver. If it gets above 19, I mean, metals as an asset class are just going to rip.
Weaker dollar makes sense. Emerging markets, metals doing well.
So they all kind of tie together.
And then what about yield curve? It's a trend. I mean, what?
Yeah, I don't know what
clients don't care. You know, aren't going to trade the yield curve. I mean, some of our clients do. You know, the bigger ones, obviously, they do.
Well, I mean, if you're looking at just treasuries, right? Like, unless they're trending, you're not going to get major outperformance from one or the other, one maturity versus the other. So if you look at, like, you know, the 2-year versus the 30-year, I mean, sure, it inverted and then it uninverted and then it inverted again. So, like, I don't really know what the signal there is. I'd have to do more work on it, but from my perspective, it's just kind of messy. And if we think interest rates as a whole are going to continue to kind of chop around and not make sustainable progress in either direction, I don't really see why the yield curve would matter in that sense.
Not so much that it's going to matter, but the direction itself, the trend is up. I mean, the trend's not down anymore. In like 2s, 10s, for example, to say.
Yeah. I got that. It's
I mean.
So how would we tie that in with the other thesis that I outlined, or is it more just?
I don't think we have to. I don't think we need to go crazy, you know, bucketing everything into themes. Like, it's just what it is. Like, when we talk about fixed income, like, just mention the curve, like, the trend is not down.
Yeah, makes sense.
Yeah.
And then I think the dollar is interesting. I mean, outside of the euro, if you look at, you know, the dollar versus the emerging market currency basket, CEW, I mean, we wrote about that 2 weeks ago, 3 weeks ago. It was supposed to, you know, be the end of emerging market currencies going up against the dollar, and we're seeing the exact opposite. So I don't think it's just a euro thing. I think it's a more broad-based weakness in the dollar, and I think 95 in the dollar index is probably the level. If we get 96, if we get a weekly close below that, that could really start to signal the start of something bigger.
And isn't all that inflationary, and tips versus regular treasuries are making 4-month highs? Isn't all that inflationary, weaker dollar, all that?
Yeah, for sure. I'll link back to the Reflation Trade post I put out a couple weeks ago, because like you said, tips are actually breaking out now on an absolute basis as well. And they continue to outperform IEF. So I think, you know, all of these things coming together, dollar falling apart, you know, inflation coming back. If that is the case, then we should see cyclicals in the U.S. start to pick up as well. We should see financials, industrials, energy start to pick up. So I know a lot of them are retesting their lows relative to the S&P at the moment. So if those can dig in and start to move higher, I think that'll be another data point that suggests.
At the 2016 lows, at the early 2016 lows, if you guys remember, I was like Mr. Gloom and Doom in 2015, like Deutsche Bank's going to zero, like short everything. Like, I was that guy in 2015. And then 2016, the data changed. So then in January, we got lows across the board, and that was the internals low. That was when Latin America and emerging markets bottomed. Tech and semis all bottomed at that point. And then in February was the second bottom of the double bottom, and the S&P retested, Europe retested, Japan retested, the Dow retested, and then we went on from there with financials and some of the other areas that we were waiting for. So this is kind of like that. It's not exactly a double bottom per se or anything like it. It's more of like a consolidation near a bottom, resolving higher. The best ones bottomed and took off. the slower ones are doing that now or have the potential to do that now. That's basically what's happening.
I think that you can even say it's just a more structural pattern than what happened in 2015, 2016. Like that little double bottom that for most of the major indexes was actually like a failed breakdown in early 16 that you're talking about.
Yeah.
If you look at like SPX, even we had a little failed breakdown right below the December 18 lows, again, that we're just launching out of. And a lot of the indexes look that way now. You have to zoom out a little bit more to see it. But I don't see how that could be a negative, you know.
And then on Robinhood, so then in the quarterly report, let's throw in the latest Robinhood. We could just include that instead of the Robinhood being its own post. Strouser, just include that in this.
What do you mean? Just the whole post?
Yeah. Just have that as part of the quarterly report. We'll just include it into the report.
But the new weeks, like this week's.
Yeah.
Okay.
Instead of publishing as its own post. I mean, you could, I guess, if you want. I don't know. I figured we're coming up with this big report. Let's just throw it all in there.
Yeah, so the Robinhood, this weekly Robinhood post will go into the playbook.
Yeah.
Got it. So to add on what Tom's saying, like you're not just seeing that reflation trade on a relative basis or looking at tips. Corporates are starting to outperform on a short-term basis. High yields starting to outperform on a short-term basis. Treasuries still look okay, but they're underperforming relative to their fixed income peers. Then if you look within commodities markets, you're seeing the same thing. It's lumber, it's copper, it's crude. Natty's finally participating or trying its best. It's been gold and silver for the past 6 months.
Even some of these agricultural commodities look okay.
Yeah, I didn't even look at those. So that's
when's the last time I could even say that? Like corn looks all right. It's not falling apart. Not going down is progress for these things. So the fact that soybeans are pushing towards like 3-month highs, like that's a big deal.
Yep.
Sean is stoked about the soybeans. Sean, can you write like a just a couple of paragraphs where you said before about, you know, the strategies we want to be implementing and why, and the strategies we do not want to be implementing and why? Just like a quick, exactly what you just said in 2 paragraphs. Sure. Yeah. And then we'll throw it in there.
Yeah.
I'm sorry. Last thing on international. I know, you know, a lot of the focus has been on the Shanghai Composite, but like, you know, Taiwan, bro, how are people not talking about this? Like, I know it's been a theme for a while, but like,
we've talked about it.
Yeah.
No, I know, but just in general, like, I don't see people discussing the fact that Taiwan just made a new all-time high.
So, like, I couldn't agree more. JC, that's what I just sent you in Slack before. Looking at the momentum report this week.
Well, remember what's in Taiwan, right?
Yeah, so. I mean, it's one giant semiconductor. But
it's not just Taiwan. All right, all the bullish reversals this week, it was EEM, it was EWH, which is Hong Kong, EWY, which is South Korea, and FXI, which is China. So those were the big bullish weekly candles that undercut their lows from last week and then ripped higher and closed above. And you're seeing major follow through today.
Yeah, and more importantly, from a structural perspective, if you look at those 3 markets on a local currency or ETF basis relative to the S&P, they're the only ones that have been putting in basis for a couple months. Yeah. Or even like 6 months at this point. So if those are resolving higher, these could be the potential turning points of a 10-year downtrend or something.
Yes.
So that's another theme I think is what.
And how about European banks not sucking? Well, that's big.
Yeah, that's a positive.
You know what I mean? Like same as like what you said with the ags. It's kind of like that. Like they're not going. They're not falling apart.
Yeah.
I think we could be at an inflection point for the relative trend of U.S. outperformance. Not because the U.S. looks weak, but because the rest of the world finally looks like it's very, very strong on a short and intermediate term basis.
I mean, I hate to get too excited, but look at EUFN over XLF. I mean, nice little fail breakdown, bullish momentum divergence, and that could get going. It looks similar to emerging markets versus SPY.
And if we were having this conversation a month or 2 ago, we'd be talking about the outperformance from Europe. Let's not forget, Europe had their time, earlier this quarter where they were outperforming. Now we're seeing it from Asia. So it just kind of seems like even though things are still gravy in the US, they might be getting better in other regions.
Things are gravy in the U.S.
Things are pretty gravy in the US from what I'm seeing, man.
Yeah, for Europe, I put down Sweden and the Netherlands as ETFs that look good on a relative basis.
So we're going to the Netherlands. When there's a cure for this thing, we're going to go to the Netherlands. We're going to film a documentary on the Dutch tulip bubble. One, I don't like that. I think it's ugly as hell. It makes me sick.
What?
You just sent me look on the Allstarcharts Slack.
All right, well, it's no help for you then, my friend.
I hate it so much. It makes me so angry.
You hate them worse than the black?
No, but I still hate them.
Sean, do you think it'd be possible to just build a better one, or are there too many inputs that go into this?
Certainly it's possible. Is it possible by you and me? No.
No, Thomas.
You and me.
Thomas says we underestimate him.
Thomas ain't going to be able to do it either.
You don't think so?
Nope.
There's a lot of inputs. There's a lot of Greeks that have to go into it.
So many Greeks. All right, are we good? Or Straza, you got another 10 things on your list? No, seriously, if you have something important, say it. I'm just busting balls.
No, I'm good.
All right, Bruins?
No, I'm good. I'll check with my niece and see if she can draw up a nicer options graph. Get her some crayons and markers.
There has to be. Straz, are you with me? Like, come on. There's got to be a nicer way. There's got to be a way.
Sean, what's the first thing I asked you when I started working here?
I don't remember.
It was, where can I go to find a goddamn options calculator? There's not a good one. I think Thinkorswim or the brokerages have the best ones.
Thinkorswim has the best one. That's the one you're looking at here.
Yes. So there's not another one out there. This is just another thing we could do. I think it'll take a lot more in terms of a lot more data is going to need to go into it. But
I'll get a call going. Straz, you can be on it if you want, and then we'll talk with Thomas and Sean and figure out the calculator search.
Sean, what do you think from an options trader's perspective? Is it something like you're obviously cool with what you're using right now? Do you think if like an easier options calculator came along, somebody like you would be like, oh, that's cool. It looks sexier, but it doesn't add any more value. I'm still getting out of it what
I've been using this thing since 2003. I don't even see it. It just works.
Yeah, I mean, if it's just cosmetic, like it doesn't really, nobody cares.
There has to be a better way. So ugly. I hate them so much. I'm going to tweet out this NASDAQ futures chart, which is so dope.
But do you see what I'm saying about how the futures look a lot more orderly?
Yeah, totally.
All right, cool.
All right, boys.
Later.
Fellas.
See ya.
Peace.